As you can see, gang, we're on the 1 hour. We can just see the overall trend on the 1 hour. As you know, we were in a downtrend before this. On the 1 hour, you can just see the overall trend more. It was in a downtrend before this, and now we're back in an uptrend after a major downtrend from take profit 6. This was back in January last month. Price went all the way from take profit 6 all the way down to take profit 4. From what 1847, started really at 1853, and then headed all the way down to 1783. So after an extended downtrend, price will consolidate and then give us some type of candlestick pattern. It gave us some type of candlestick pattern, and then what, price is now heading back up. Gave us some type of candlestick pattern. That's why it's extremely important to pay attention to candlestick patterns. What price may start making structure, boom, makes a higher high, higher low, higher high, higher low, higher high. Like price starts making structure, letting us know that we're in the uptrend, making higher highs and higher lows and higher highs and higher lows, all the way up to take profit 4, all the way up to take profit 4, boom, and that's where we're at right now. Take profit 3, take profit 4 area, from take profit 4. So a lot of factors come into when you're trading. You have to adjust to what the market is showing you. Like, so having a trading plan is extremely important for your psychology, is sticking to your trading plan. So once price makes structure, makes a higher low, near our psychological level, we're looking, okay, it made a higher low, it dipped back down to our psychological level or take profit 3 level. We're waiting, we're being disciplined and we're being patient and we're waiting to see what price wants to do. Pay special attention. As you see what price makes a 3 yellow soldier pattern, gives us a bullish engulfing pattern here, and another yellow Marubozo candlestick pattern here, and then it's that price wants to continue back up. Like, we have to pay special attention to our to our psychological levels. Take profit 3, take profit 2, take profit 1. As price once price gets to our psychological level, we have to pay special attention to see what price wants to do when it gets to our psychological level. You have to concentrate and be committed to improving, and having a good trading strategy and a good trading system can potentially make you a lot of money. But you have to be patient. You have to know these are our psychological levels, our support and resistance levels, which is this our psychological levels, our take profit 1, take profit 2, take profit 3 levels. You have to put this all into factor. You can't be greedy as you're trying to be greedy and you're trying to swing trade this February the 2nd, and price shoots all the way back down, gives us what, a black Marubozo candlestick on February from February the 2nd. We see consolidation right here, and then what? If we see a black candlesticks, we see a long black Marubozo candlestick push all the way past all our trades, trade 1 and trade 2, even great trade 2 and trade 1 all the way down to 1788. So, and this is an actual live trade. You would have lost all your money. If this was an actual live trade using this market, would have, and I know that feeling. You would have been. I know how it feels, and you'd have been mad at your broker when price got to take profit 2, started consolidating. We see a bearish engulfing pattern. I'll scroll in a little bit, to show you that. Boom. We see this black candlestick over this yellow candlestick right after consolidation. Let us know bearish engulfing pattern, black candlestick engulfing the yellow candlestick right after this consolidation right here. Let us know that we're in a downtrend. And then what? We see a black candlestick right after that break of this trend line. You need to see price making lower lows and lower highs and lower lows. You see a break of this trend line, and now we're in a downtrend. Boom, it goes past all your trades for the day, all the way down to 7. As you can see, boom. Like, I'm gonna show you this too, as this all goes in with your psychology. All of this goes in with your psychology, like downtrend. Like, a downtrend is an overall move, okay, in lower price. A downtrend is an overall move in lower price created by lower lows and lower highs. A downtrend describes the price movement of a financial asset when the overall direction is downwards. So It describes a price movement of a financial asset when the overall direction is downwards. In a downtrend, each successive peak and drought is lower than the ones found earlier in the trend. A downtrend is therefore composed of lower swing lows and lower swing highs. Okay, as long as price is making these lower swing lows and lower swing highs, the downtrend is considered intact. Once price starts making higher swing highs and higher swing lows and higher swing highs, this downtrend is in question or has reversed into an uptrend. So this is extremely important for your psychology. That's why I'm putting all this together. Like we have to put everything together. Again, as you can see, price will make higher swing highs and will make higher swing lows and higher swing highs and higher swing lows and higher swing highs and higher swing lows, making what? Lower lows and lower highs and lower lows and lower highs and lower lows. Let us know that we're in a downtrend. Okay, as you can see, price made lower swing lows and lower swing highs and lower swing and lower lows and lower highs. Look, made a lower low, lower high, lower low, lower high, boom, and then we see what? A lower low all the way down to take profit, all the way past take profit 3, smashing past all our trades, all the way down to 1788. Like, you know what, making lower lows and lower highs. See a lower high push back up to 1807 right here. Then what makes a lower low, makes another lower high, and then finish and then finalize this lower low all the way down to take profit 3. Once price starts once price starts making lower lows and lower highs at our take profit level, we have to pay special attention as price will what? Make higher highs and higher lows and higher highs back up, pushing price back up, letting us know that this downtrend from February 2nd to February 3rd is no longer intact. And now, price is what? Making higher highs. Same thing here. Price made a what? Lower high, made a lower low, then it made a lower high back up to 1815. It made a lower low to 1813, all the way up to 1810, consolidated, then went back up to 1815, 1814, before making a lower low. We see a long black Marubozo candlestick on the 1 hour, push past trade 2 and trade 1. So price will do this over and over and over again, gang. Like, that's why it's important to understand market structure. Downtrend, uptrend. This is a downtrend. Price will make lower lows and lower highs and lower lows and lower highs and lower lows. So extremely important to understand as lower peaks and droughts. Lower peaks and droughts characterize downtrends where lower lows and lower highs taking place. A peak refers to the highest point, and a drought is the lowest point. A downtrend is characterized by chart peaks and droughts reaching new lows, and a trend is in progress. When we see a new lower low, a trend is still in progress. A downtrend is still in progress. So if you're looking at the chart over time, it may be zigzagging, but it's generally just going down. Price is generally just going down. It's zigzagging, making lower lows and lower highs and lower lows. Once it makes a new lower low, past this lower low, we're still in a downtrend. Makes another lower high. Once price makes a lower low past this lower low, we're still in a downtrend. All right, so extremely important to understand, for your psychology to put it all together. So traditionally, the way to spot a spot downtrend is to look for lower lows as well as lower highs. That's because too many sellers are in too little demand. There are too many sellers and too little demand of buyers, so price goes down. After a major uptrend, you will see what price head back down, making lower lows and lower highs and lower lows. The highs are also the lowers because sellers are motivated to get rid of their positions, and there aren't enough buyers to step in and replace them. Trader utilizes trend lines to identify downtrends and spot possible trend reversals. So you have to pay special attention to all of this. The trend line is drawn along a falling swing high, which helps you show where future swing highs may be formed. So a downtrend is when price action is moving lower over a period of time, and in most cases, and is most recognized by price creating lower lows and lower highs. Okay, so a downtrend provides traders with opportunities to profit from falling excess of price. So extremely important for your psychology, and we're gonna break this down more in our next video. All right, gang.